So let's now look at an activity that is activity 4 in your chapter number 4. Worley, Bell, Murphy and Cobbett, VBMC is a small 4-partner independent audit firm with a single office in a regional location. Clients include business and companies, mainly in retail and financial services industries. So when we see the term financial services, definitely financial services client are considered to be a bit of high risky client. So if an audit firm is catering to this financial services industry, then there is specific regulatory requirements that those clients which are in financial services industry should undergo certain quality management processes like quality reviews, etc. Two of the biggest firms clients are listed, so they have to go through engagement quality reviews for the engagement performance. VBMC operates in a regime which has adopted IASB, Assurance Quality Management and Ethical Standards are its national standards. Leadership for quality within the firm. The firm considers quality management very important and endeavors to comply with international guidance. So don't get carried away with the sentence. When you see the sentence, you might feel that okay, they are good with quality management, but don't get carried away. There could be deficiencies with respect to the quality management or coming scenario, so be skeptical about it. This particular sentence is kind of like a I would say like a distraction, that you might think that, oh, when you read the sentence there might not be any trouble, but you have to be skeptical and be aware of each and every sentence that you're going to read. Mick Murphy is the partner in charge of quality. He is also marketing partner due to his commercial awareness. There is no specific quality management department. Okay, there's no specific quality management department, but Mickey gives an annual update on the firm's quality management process, August, when he is not busy. Okay, so that's a red flag. So he looks at quality management procedures only when he is not busy. Annual quality reviews are not undertaken. So that as part of the monitoring and you know that you need to have an annual reviews. Secondly, there is no risk assessment process. The partners are daily contact and discuss the quality at their meetings. However, as part of the Mickey's annual marketing review clients, he identifies any client perceived as risky due to the size of the firm's dependence on them. So that is something which is a bit conflict. Why? So he identifies a client to be risky due to the size of the firm's dependence on them. So if you are going to mark a client as risky because you have a dependence on them, it could be considered as a threat. There could be fee dependence. That could be a threat, right? That could be a threat. So there could be independence issues where you have to take, where the quality might not be compromised, but at the same time there could be fee dependence, and that's not just the only threat that you might face or risk you might face. There could be other risk as well. To give an example, public limited companies. Example, entities in financial services. They might have certain quality management requirements that is required by the ethical standards. Human resource. New joiners to the firm are generally accounting graduates from local university to minimize the training cost. They all attend the final reviews with a senior partner, Roger Whaley. Selection is based on their exam marks, their ability to speak English fluently, and presentation and confidence. Annual appraisal of all performance are conducted by the senior partner. He feels that the firm, although growing, is still small enough to appraise staff personally. Promotion is based on the balanced scorecard 4 criteria: marketing event attended, completion of audit work on time, feedback from client, punctuality of arrival in the mornings. So what's the problem here? So the human resources are not managed very well. Why? Because if you look at here, all the new joiners are dependent on the local university, and the training costs are minimized, which means they are not gone through rigorous trainings. So you just because they have a university degree, the resources cannot be dependent on just their university degree. There have to be proper trainings conducted. The firm's resources, policies, methodologies, principles have to be communicated to them. So that is not done very properly. There is no formal training that they seek. Like, it's just the senior partner Roger Whaley takes his interviews and there is an annual appraisal. That's it. Then there is an annual appraisal, but they are not going through from the day one. They are just put onto the work, but they are not going through a rigorous training and a formalized training is not conducted, but as per ISQM1, the resources requirements do say that a proper training and information have to be communicated to them in a proper manner, which is not happening very clearly. Also, I saw a conflict of interest which I forgot to mention. If you look at here, Mickey Murphy is the partner in charge of a quality, but he is also the marketing partner due to commercial awareness. So that is a conflict of interest. A quality partner have to be independent. He cannot be like the person who's charge of the quality at the same time he's the one who's bringing the business. It cannot be done. So the quality partner have to be someone else other than Mickey. Now let's talk about audit process. All audit work is reviewed by the auditor in charge before the presentation of files to the engagement partner. Okay. The AIC highlights the key risk areas for the partner to perform a second review on. Files are created and delivered for review entirely electronically. Due to the firm's scanning facility being oversubscribed, less important physical evidence is discharged at the end of the audit. Okay, so look at this. They don't have enough technology resources, right? So, they might undergo certain quality issues because they don't have enough technology awareness, or they don't have enough technological resources that are with them because they are still small, right? Now look at this. The firm is too small to have industry units, so clients are spread across the 4 partners based on their location. So these resources are not sufficient when the firm is actually auditing even financial services industry, because financial services industry, the audit and the details and the documents would be very heavy, and there will be a lot of detailed documents that they have to go through. To give you a simple example, when I was auditing a bank, the bank had around 1,000 retail customers who takes loans, and we had to sit and review each and every customer. So the documentation was very heavy, and they had to scan the documents and send it to us, and we need to check. So if that particular team is not technology savvy, then it's gonna affect the quality very heavily, because there will be time pressure and time bound, etc. Here the scanning facility is oversubscribed, and they don't have enough scanning facilities, which means they won't be able to maintain the documents very well. They just have to check the physical evidence, and less important physical evidence are discarded, which means it's destroyed, which is not again appropriate, right? So as per the quality management, all the documents have to be maintained. Tomorrow if a regulator comes, FRC comes and asks for the audit, specifically in financial services, you are required to maintain the document, otherwise you will get penalized. And the third is like the clients are spread across 4 partners based on their location. That's not ideal, like because let us say I am a partner who is situated in Mumbai. Now I will have certain clients over there in Mumbai, but what is my specialization? What if I'm specialized in financial services, and the financial services client we have is in Chennai, and in Chennai the partner, he is taking care of manufacturing industry, but I am in Mumbai, I am taking care of the manufacturing clients, but he is specialized, the Chennai partner is specialized in manufacturing. So the partner's location should not be the one to select the clients, but rather the location, the specialization of the partners is something that have to be focused on. That's what it should be focused on. Technical matters. An ethical help desk is staffed by one of the partners, Jane Bell, when he is in office, who is respected in the firm for her technical knowledge. Staff are encouraged to seek help where they consider it appropriate. All staff are provided annually a memory stick of PDFs containing IFAC pronouncements for conducting the audits. This seems very vague because the resources are not good enough. Like, they should not be just given a memory stick, but proper resources information have to be settled in a library, and they should have access to the library anytime, any point in time, and that library have to be updated very frequently. Any necessary library data, exchange rate, share price are obtained directly by the audit staff from the internet. So here the problem is that when such resources are existent, what happens is that they might be taking in data from internet might not be trustworthy. So the partners should give trainings to the staff to use which specific sites which are trustworthy, or which specific sites that can be used for the conducting the audit. So the staff have to be given guidance by the partners or the managers or whoever it is, the senior officials, to ensure the information that they are gathering is from a reliable source data. They cannot just go Google and maybe take the data from Wikipedia, because Wikipedia is updated by anyone. So you cannot trust the source called as Wikipedia. But they can, take information from reliable or credible sources. To give you a very simple example, let's say that, if I want to get the share prices of any company for a client who has invested in a company. Let's say, for example, that I'm auditing a client which has invested in Tata Motors. So if I want to get the shares of Tata Motors, I will go to the websites of the stock exchanges. Like if it's in India, okay, National Stock Exchange, or if it is a Bombay Stock Exchange, or specific stock exchanges. Because in stock exchanges is one which will have the proper relevant data. They cannot go to any other, source data and take the price. Maybe the price is wrong. Maybe the price is different. And they should also be given guidance on, how they are taking the prices, like for which date. Because in certain websites, navigation is very important. So if they take the date as, let's say, instead of 31st December, they take it as 30th December, then the price might differ. So those kind of things should be given. And in exchange rates, when I was auditing, we have a website called as Bloomberg, which is approved by the, which is definitely approved by the, by our partners or by the firm, which we can use as a terminal to get the exchange rates, etc. Or even, in fact, they have share price as well. So those kind of information you have to gather, and that particular information have to be communicated to them as well. So since we have now highlighted the issues here, let's put it out into words. So I'm not going to explain each and every point, or I'm not going to write down every point. I'm just going to write down the summary of the point, or I might write it a couple of words of those pointers, because I've already explained that. So the first point is that there is no evidence of any risk assessment process. So no evidence of the firm's risk assessment process. So the firm is not doing, quality management as per the ISQM1, because the ISQM1 specifically says that the entire system of quality management should be reviewed for a risk assessment, like where there could be chances of risk that the firm could face, etc. So that is not happening. So there is no evidence of any risk assessment process that being conducted. Second situation is that there is a conflict of interest. So conflict of interest. The conflict of interest is between, Mickey, in Mickey's role. So Mickey's role as managing partner and quality partner. So quality partner. So this is a conflict of interest. Now this comes under governance and leadership. So further, the same conflict of interest. So the same conflict of interest between the Mickey's role as managing partner could affect the client's acceptance and continuance as well. Why? Because there's no procedures that the firm has established where they are doing any screening procedures, and the client integrity and the time and resources are not reviewed properly. So that shows that, if that have been done, then definitely Mickey's commercial and ethical roles would have objected the acceptance and continuance part of the quality procedure. So that is not done. So hence, since the acceptance and continuous role is not performed properly, continuance role is not done properly, the procedures are not done properly, there could show a possible conflict of interest between the commercial and ethical roles of the Mickeys. Now then there is resources. So the approach to resources are very poor, right, as I already told you, right? So the resources part, the approach to quality updates is inadequate with respect to ISQM's resource requirements. The staff are not trained properly, so no formal staff training. This comes under the resources part. The resources part of the quality management, which I've already explained to you, that they are dependent upon the university degree, but they are not given proper trainings or guidance. Now you cannot just write these small pointers and expect 10 marks. You have to explain it. You have to explain it in a deeper way. I just doing the explanation part orally, but writing the pointers over here. So if you want to note down the explanation part, do that as well. The fifth point is in relation to the ongoing monitoring and remediation compliance. Like the firm's system of quality management is required to go through a monitoring and remediation process, but that does not appear to be present. The partner cannot argue that the firm is too small and saying that, oh, you know what, we cannot monitor the client. So we have given the audit report before an engagement quality review. And for 2 listed clients as well, the engagement quality review is required. They just can't say that, you know what, we are a small firm, so we cannot do an engagement quality review. So there is serious inadequacy in relation to the compliance of monitoring and remediation process of the quality management. So inadequate compliance over monitoring and remedial process. I'm gonna explain it that where 2 listed clients, listed entities would require to undergo engagement quality review, but the process seems to be inefficient. That's the criteria, that's the condition over here. Now the next point is again in relation to the principles for no formal training of the staff and as well as new joiners, which I've already explained to you, so I'm not going to explain that again. Then we can talk about information. So information and communication. So information are given in a memory stick, and that seems inappropriate as per the information and communication component of the audit quality. So there have to be proper trainings, adequate resources, libraries have to be given to the books, etc. have to be given with updates, all the necessary updates, all of them have to be given in an appropriate manner to the staff. So in EVA and all, what happens is any changes or any new thing that comes up, a proper email blast goes out so that everyone will read it and get an access to those information immediately. And as well as the resources are the appraisal resources are not actually are not consistent with the quality management objectives. For example, if you look at here with respect to the appraisal, if you look at here, what it says is that, okay, feedback from the client based on the assessment after each audit, punctuality of arrival in the mornings, completion. So they are not talking about quality as an objective of performance appraisal. They are just saying what is the feedback. What if the the staff were too friendly with the clients and they did whatever the client asked them to do? But does that mean that they are doing the audit with high quality? What you're supposed to do as per the standards might be different from what the client expects you to do. The client might say, you know what, you show this expense more or less. But is that what you're supposed to do? No, as per the standard, you're not supposed to do that. So maybe the client might give you good feedback because the staff was very friendly with the client and did whatever they want to do. But as per the relevant standards, they did not follow the procedures or process or even evidences clearly. That's what is lacking. So the feedback appraisal process is also not correct. So the feedback and appraisal process are not consistent, consistent with the quality management objectives. Again, this is part of resources. Okay, this is part of the resources. Then the next one is 8th one. The review process undertaken as part of the engagement process is inadequate to ensure quality. Areas undertaken by the AIC is not highlighted as important, would not be reviewed by anyone. So if you look at here, the AIC highlights key risky areas to the partners for the second review on. But if it is not highlighted, nobody reviews it. So you can say that the engagement performance, you can say that the review process, you can say the review process in engagement performance is not adequate. And why it is not adequate? Because those areas not highlighted as risky or important will not be reviewed by anyone. So those areas which are highlighted as risky or not highlighted as risky or important, they will not be reviewed by anyone. Okay. And here the next part is, as I told you, documents are being destroyed. So documents are destroyed. Again, it's part of the engagement performance. The documents are being destroyed. The audit evidences are required to be supporting the file and should not be destroyed. So that's what is being done here. Then the 10th one is allocation of audit partner based on location. As I already explained to you, the resources part are very weak and they are not managed properly. They cannot be allocated based on their location, but rather they should be allocated based on their expertise. So based on their expertise only they have to be allocated. And then 11th one, the facilities should be available for technical consultation of the engagement partner. So there is no consultation which are allocated, and the technical manager are accessible to the staff, right? But they have to be more accessible. They have to be on call. They have to review the opinions. The second opinions also should be there. So those technical consultation are also very weak. Technical consultations of the engagement performance are very weak. They should not be only accessible to only group of staff, but they should be more accessible to the entire audit team members, not just staff. Like if a technical partner is there, he should be accessible to the managers as well as everyone, not just the staff, right? Additionally, ethical compliance should not be left to the members of the staff. At least annual written independence should be taken. So annual independence is required. Annual independence is required to be taken from staff. From all the staff. So that's very important. Okay. And last and final one, as I told you about, is the data from internet. So data from internet, it is okay to take the data from internet, but whether the credibility of the source, so credibility and source of data from where to be obtained should be given as guidance. So the proper guidance should be given to obtain the data from the credible sources, etc. That's very important. So again, these are the pointers. If you want to score more marks, professional marks, you have to explain. And certain things I have explained orally. So do note of it. And when you are practicing it, think from that line. Always remember to answer the question from what, why, and how. You need to ensure you have answers to these three questions. What's the issue, why it isn't coming as an issue, and how do you resolve it? So you need to give advice. So you just cannot mention what are the issues of quality, but you should also advise why it is a quality management issue and how the firm can rectify them. That also guidance should also be given. Only then you will score professional marks. Only if you explain these two, you will score the professional marks. Else you might lack scoring the professional marks.